You look at the news with all the global tensions and economic uncertainty floating around, and you've got to ask yourself one big question. Is now really a safe time to be buying property in Singapore? Well, let's break it down. Look, it's the elephant in the room, right? With everything escalating around the world, a lot of people are getting nervous, wondering if the very foundation of one of the world's most stable property markets is finally about to crack. And hey, this isn't just some vague feeling in the air. The fear, it's tangible. You've probably seen the headlines yourself. Developer stocks are taking a hit. Home sales are slowing down. That kind of uncertainty definitely makes the market jittery. Okay, but hold on a second. This is where we need to press pause and ask ourselves a really important question. Are we letting our emotions get ahead of the actual evidence? Let's try to put the headlines to one side for just a moment and see what the hard data is telling us. A perfect recent stress test for this is the COVID-19 pandemic. And the numbers, well, they tell a really clear story. While the stock market, the Straits Times Index, took a nosedive, plummeting nearly 15%, the private property index barely even flinched. It dipped just 1% before bouncing right back. It's a powerful reminder that property and stocks are two totally different animals. Real estate is just so much more insulated from these short-term shocks, because at the end of the day, it's a long-term asset driven by the fundamental need for shelter, not just daily market jitters. Now, to really understand this incredible resilience, we need to look even further back. So let's wind back the clock a bit and see how Singapore's property market has actually held up during major global conflicts in the past. The answer might surprise you. Looking at this timeline, you can see a pretty clear pattern emerge. From the Gulf War back in the 90s, to the Iraq War in the early 2000s, and all the way to the recent Russia-Ukraine conflict. Geopolitical shocks are nothing new for this market. It's been tested again and again and again. So what happened after that first Gulf War? Did the market crash and burn? Not even close. In fact, it was the exact opposite. In the 5 years that followed, property prices surged by an absolutely incredible 160%. The market didn't just survive the uncertainty, it completely thrived. And you might be thinking, okay, maybe that was just a fluke, but nope. The pattern repeated itself during the Iraq War. Over 8 years of conflict, the property price index climbed steadily by almost 83%. It just shows this market's remarkable ability to see past the short-term noise and focus on the long-term fundamentals. So this brings us to a really, really important question. If these massive global conflicts aren't the things that actually cause major property downturns here, then what is? What are the real threats that we should be watching out for? Historically, the data is pretty clear on this. The major property downturns in Singapore aren't triggered by wars. They're caused by two other things: severe financial crises that hit people's jobs and incomes hard, and deliberate government policies, cooling measures designed to tap the brakes on the market. It's the internal economics, not the external geopolitics, that truly moves the needle here. Okay, so that explains what doesn't crash the market. Now let's get into the why. Why is Singapore so resilient? Well, it all comes down to this really powerful phenomenon known as the safe haven effect. A safe haven? I mean, the name pretty much says it all, right? When the rest of the world feels unstable or chaotic, capital, investment, and even talented people, they all start looking for shelter. They're searching for places where they know their assets and their families will be secure. And Singapore? It basically checks every single box on that safe haven list. Unshakable political stability? Check. A strong, transparent legal system you can actually trust? Check. World-class financial hub? Check. I mean, these aren't just buzzwords. They're the reason why the number of family offices here has exploded to over 1,100. In a strange way, global instability often just speeds this up, driving even more capital to Singapore's shores. So what does this whole safe haven thing actually mean for someone who owns property here? Well, it translates into something that we can call the stability premium. This quote just absolutely nails it. People aren't really investing in Singapore property for some crazy speculative, get-rich-quick return. They're investing for peace of mind. In a very real sense, they're buying into stability itself. And you can see that trade-off right here in the plain numbers. Compare Singapore to these other global cities. Sure, a place like Dubai or Tokyo might offer higher potential growth, but they also come with much higher volatility. Singapore's story is different. It's one of modest growth paired with low volatility. You're basically trading wild swings for consistency. And that, right there, is the stability premium in action. So, we've looked at the past and we've looked at the present. But what about the future? Let's zoom out and focus on the long-term fundamentals that are set to anchor this market for decades to come. There was a recent report from DBS called Singapore 2040, and it gives us a really clear roadmap. It paints this picture of a nation that isn't just surviving, but is continuing to build and grow on its already super strong foundations. At the very core of this whole outlook is the economic engine. Projections show Singapore's GDP more than doubling by 2040, hitting $1.4 trillion. I mean, think about that. That kind of sustained growth creates wealth, it supports incomes, and it acts like a powerful long-term tailwind for property values. And with all that growth, of course, come more people. The report estimates we're going to need up to 300,000 new homes by 2040 just to house a growing population. This isn't speculative demand we're talking about. It's a fundamental need for shelter. That creates a really solid long-term demand floor for the entire market. So what's all this mean for prices? Well, the projection isn't for some wild boom, but for steady, sustainable growth of about 2 to 3% per year. This just reinforces the market's identity as a reliable, long-term store of value, not a casino for short-term gains. So when you pull all of these threads together, the history, the safe haven status, the future outlook, a pretty clear picture emerges. This is a market that might bend in the wind when fear takes over, but it doesn't break. Its foundations are just too deep to fail. This quote, I think, captures that core trade-off perfectly. The Singapore property market offers a really unique value proposition. You exchange that chance for dizzying lottery ticket highs for something much more valuable, protection from devastating lows. And that leaves us with a final thought to chew on. As the world becomes more and more unpredictable, the value of a sleep well asset, well, it only increases. So the real question isn't whether you can afford to buy into stability, but maybe, can you afford not to? What's the price you'd put on peace of mind?